Welcome to the Titans of Industry show. Today I'm with Jordan Roy-Byrne, the editor and publisher of the Daily Gold. I love his approach to the sector. And for me, if you don't take this interview seriously, you're missing out on a lot of value. This is one of those people that can turn your heads and give you a lot of value and a lot of knowledge. Jordan, how are you today?
I'm great, Lior. Thanks for having me, and thank you for the very kind intro.
Look, Jordan, I know you just came back from a major mining conference up in Vancouver. You're currently calling yourself a bearish bull, and I think I get the idea behind it, but I want you to share with me exactly what this mantra implies.
Well, the mantra implies, it's kind of two things. I mean, I don't like to talk about myself, but first, I've noticed just reading through many of my updates over the last 18 months or so that I've been bearish and cautious at times. Even when we were taking off in early 2016, I participated in it, fortunately, but I was cautious at times. So I have a tendency to kind of, these last couple of years, I've had a tendency to be a bearish bull. And then I thought, well, if you actually look at precious metals and where we are, that makes a lot of sense. And the reason I say that is because I think that if you're looking at, there's a bit of a dichotomy between the companies in the industry and then metals prices. Because if you look at the companies, for example, the worst for the companies was probably 2014 or 2015. Like if you want to get really technical, that's when the fundamentals were the absolute worst, like when margins for producers were the worst. But then when you had the oil crash, that was really helpful to the sector because oil and energy prices are a big component of mining. And then at the same time, we had the big dollar rally, but gold has been performing well against foreign currencies since the end of 2013 or since 2014. So if you look at the gold price in Canada or Australia or in Europe, I mean, it's been very strong, much stronger than the U.S. dollar gold price. And so those types of things, and the reason why that's important, Lior, is because if you have a mine in Canada, for example, you pay most of your costs in Canadian dollars. So I'm not saying that the U.S. dollar gold price isn't important. I'm just saying that for a company in Canada or a company mining in Australia, the local currency and the local gold price factors into your margins. So for the companies, for gold producing companies, I mean, margins really bottomed out in 2014, 2015. And with respect to juniors, I mean, juniors now are able to raise capital. I mean, I talked to some companies and I said, hey, what happens if gold goes to 1050? I mean, are you going to be okay? And they'll say, yeah. I mean, some of them I talked to said, yes, we have backers, we'll be fine. We can wait it out. And so the industry, basically, the industry and the companies, the worst is over. The bear market ended in January 2016 or middle of 2015 for the senior miners. But if you look at the metals, the situation with the metals themselves, gold and silver, I mean, technically right now they look really poor. Fundamentally, as you know, I follow real interest rates quite a bit. And the problem with real interest rates right now, and remember, gold needs declining or negative real interest rates. And the problem right now is if you look at inflation, inflation has peaked for the time being. I mean, if you look at the statistics, it's peaked in recent months. Commodity prices, which can be a proxy for inflation, I mean, they look bearish. They're rolling over. They're breaking key levels. And so I'm not saying we're going into deflation. I'm just saying the rate of inflation has peaked. And so the rate of inflation is declining. And then at the same time, if you look at interest rates are, at least short-term interest rates, they're still rising. The Fed is still going to hike probably twice. We know that one hike is already priced in. Some people think there's 3 more hikes this year. But any way you look at it, interest rates are still stable to rising for the time being. I don't think it's going to last into next year. But for now, you factor in that plus inflation peaking and going down, and that's negative fundamentally for gold. And then you look at the charts. The charts for gold and silver look negative, and they're reflecting that. And so that's kind of the whole bearish gold bull situation. If you look at the companies, things have already bottomed, but if you look at the metals themselves, they haven't really, maybe they'll make a double bottom, maybe they'll go a little bit below. I don't know. I can't see the future, but just looking at the charts, looking at the fundamentals of metals, I'm not optimistic over the next couple quarters. And the companies have actually performed fairly well over the last 18 months, considering the dollar has been really strong and the stock market has been really strong also. So, I mean, for this bull market really to get going, I think we need one of those things to break. And I don't think it's going to be the dollar, actually. I think it's going to be the stock market. And so until this massive 8-year bull market and this really long expansion, until these get a lot weaker and roll over, I mean, that until that happens, I think it's going to be tough sledding for the sector. But when those things happen, then you're going to see, gold take off, silver will follow, the rest of the sector. I don't see that happening this year. It looks more likely to happen next year. So I know that was a mouthful, but that's basically how I see things right now.
And you know what, Jordan? What I like about the precious metal sector is that there's always something to do. If the companies are depressed, then it's a good time to, if the companies are depressed, a good time to, maybe short one of the indexes. If the metals are weak, it's a great time to accumulate them because they're insurance. You're not going to get rich by owning the precious metal of gold or silver. It's the miners that have the epic gains. So no matter what's going up or down, there's always something you can do to counteract, to react to the market. I want to talk about silver for a moment, Jordan. It's down as of yesterday for 15 straight days. That has never happened. Is there any relief rally in sight for the metals, for at least for silver? Also, I just got off the phone, with one of Wealth Research Group's closest contact, the legendary Keith Neumeyer, who told me that there's still, a few days until the official numbers are released, but to expect something around 800 million ounces of silver produced in 2016, with 1.1 billion consumed. So he did say 150 million is going to be covered by the recycled, but that's still 150 million shortfall. 150 million ounces shortfall would translate to about a $3 billion hole at today's prices. Now, SRS Rocco, Steve, a good friend of ours as well, says silver stockpiles are nearly done away with. Can we finally, after this is all said and done, once the market turns over, the S&P, everything you said, can we start seeing silver at around $30 and even higher, like all these bright minds have been, showing us research over the years?
Yes, I think it's definitely possible. I mean, timing is obviously so difficult. I mean, I'll just say, so I'll be balanced on both sides. I mean, I'll just give all my thoughts on silver here and now. Obviously, down 15 or 16 days in a row, it's extremely oversold. I would look for a relief rally to begin at some point. Silver has strong support in the around $15.90 and just above $16. I haven't checked it recently, so I don't know where it's trading at right now, but it's possible it could come down a little bit more, and then from that area have a bounce. And I think, given how there's time and price to everything in the market, so silver will bounce and rally very soon, but it's possible it could just go sideways for like 2 months because it has to work off that oversold condition. Now, I'm definitely concerned about silver for the rest of this year, or most of the rest of this year. I think there's a strong risk it's going to come back down and perhaps make a double bottom. Maybe it goes a little lower. Maybe it bottoms at 13. Now, before I lose the whole audience, here's the other side of that. Silver has had. Now, I like to measure I like to measure the bear markets in the metals in terms of time and not necessarily price. Now, if you look at silver in terms of time, it has had 3 bear markets that were essentially 6 years. And if you the longest one was the 1980 to 86, I think. And based on that time scale, that bear market would end, I think, in October, November of this year. Now, here's the good news. Those 3 bear markets, those 3 6-year bear markets, when they ended, the average gain of those 3 rebounds in the first year was about 85%. Now, one of those was 65%. The other two were about 90%. And this is not even factoring in 2008. From the 2008 low, I think silver rebounded probably close to 100% a year, even a little bit more. So judging from history, that tells us that whenever silver does bottom, it's probably going to have a really, really strong move in the next year. So, I mean, silver could go down to 13 and, people will say, oh, well, this guy's a perma bear. He doesn't know what he's talking about. But then you have to look at history, and history tells you as silver can rally 80, 90, or even 100% in the first 12 months after one of these bottoms. So I see right now, I think while I'm very bearish and nervous about silver over the next couple quarters, I think by the end of next year, you could see $25, $26, $27 silver. So that's my view on silver.
First of all, with regard to your comment, I don't think anyone on listening to this call is, you've lost them with your analysis, because people, honestly, they need to hear the exact analysis, and they're very tired of perma bulls and not perma bears. Not that you're a perma bear, but the idea is people tie the price of gold to geopolitical events too much, and not to the fundamental drivers of gold, which is obviously declining or negative interest rates and a poor performance of the S&P 500. If you add a weak dollar to that, those are the perfect areas. On the short term, obviously, panics and geopolitical events, but fundamentally, it's true, exactly as you said. Inflation, if it's not going to keep rising this year, we need to see the stock market roll over, and then the Fed reversing its policy, by 180 degrees, saying, look, we can't raise rates anymore. In fact, we probably need to lower them again. And that will confirm the move for gold and silver, in my opinion, at least. So definitely, Jordan, let's talk some about specific and advanced strategies. I've been sharing with our subscribers some of the hedging strategies that we do, like dollar cost averaging, taking positions gradually with companies that are really top quality, and even shorting the ETFs on the flip side. So you're actually making money while accumulating your favorite names on the cheap. What are your thoughts on some advanced strategies that people will definitely appreciate hearing?
Well, yeah, I mean, the strategy that you mentioned, that can definitely work. Shorting or buying the inverse ETFs is a great strategy, but it's very difficult. You have to get the timing right. And with respect to that, I would be very cautious and only go into shorts when when the risk reward is really in your favor. Like, I'll give the silver example. The best time to short silver is obviously not right now, because it's gone down 15 or 16 days in a row. I mean, the next best time to short silver, who knows? It might be in 2 months. It might be in 3 months. It might be in 2 or 3 weeks. It's so hard to know. But at some point, there'll be another opportunity. I'm just saying the timing on that is very difficult. And so listeners, they might hear, oh, well, I need to short silver right now because it's going to go down to 13. If you short it too soon, the leverage can hurt you the other way. But I think the accumulation strategy is a good one. I mean, a lot of investors, it's so hard because you want to get in there. You say, oh, well, this has gone down. Oh, this looks cheap. I want to buy this. You just have to be very cautious, be very careful, and very patient. If there's a stock you really like, buy it in 2 or 3 increments. Like, let's say you wanted to buy a 7% position for your portfolio. Maybe you could buy a 2% position now. Maybe in 3 or 4 months you could add to it again, and then maybe you finish buying the position at the end of the year, and that way, you're fully loaded for what I think is going to be a great market next year. And I mean, the dollar cost averaging strategy, that works really well with the metals. Like, if you're accumulating the metals, just put in the same amount every month. You can start doing that in a couple months, and that's how you're gonna build your gold and silver position over time. And just the best strategy with the stocks is try and buy the highest quality companies that you can, and then buy them at a discount. Like I've been saying all year, don't chase strength. Don't chase breakouts. You want to buy value and buy weakness. I mean, we're still in that environment with respect to the mining stocks. You want to wait and buy things when they're really, really oversold. When you see fishing line type declines on the charts, I mean, think of a fishing line and how it goes into the water. When you see charts looking like that, I mean, that's the time you want to be contrarian and buy. And again, buy small positions, build them up over time, because I mean, you may have another 6 to 9 months where you can buy these things on the cheap. And if you're patient and your time frame is 2, 3, 4 years, you're probably going to make a lot of money. But if you think you're going to make a lot of money in the next 3 months or 6 or 9 months, I mean, it's probably not going to happen. So you really need to be patient. You need to take a long-term view, and people have. I mean, if I'm, I could be wrong. I don't have a crystal ball, but if I'm right, we're going to see weakness for most of the rest of the year. Then that will give people a lot of time to consume as much content and good information. Read books, educate yourself. I mean, there's so much there's so much knowledge that people can gain over the next year before this bull market really takes off and is really reignited. And so use that as an opportunity. And the last thing I'll say is I'm looking to buy extreme weakness and value. So I am going to do more buying this year at some point. I mean, maybe in the summer. I mean, maybe a little bit in the summer, maybe a little bit in the fall. So I'm not sitting on the sidelines for the rest of the year, but I'm just telling people you're probably not going to make a ton of money. I don't think it's going to happen this year. I mean, you have a better chance of that 2018, 2019, but be patient, buy weakness, and learn as much as you can about this sector in the next 6 to 12 months before it really takes off. And then you're going to be in a much better position in the years ahead. You're going to be much more knowledgeable than if this market just kept taking off and you'd be, buying things that were going straight up. And, at some point you would lose your money on those things.
Yeah. And obviously, Jordan, you got to remember, there's so much, outside of the precious metals sector that is still natural resources and has the same explosive upside capabilities as gold and silver stocks, and is now in an uptrend. So that's another strategy to consider, getting into other commodities that have been depressed for years and are now breaking out in a good way. I also want to ask you, Jordan, where are we with regards to the precious metal cycle? I mean, in 2016, we saw the potential of some of these companies after 6 brutal years coming off historic lows. Obviously, many investors worldwide who understand the phenomenon of negative interest rates and central banking and the effect it has on gold prices are now wondering what's next. Many people did not participate in the 6-month surge or in that roar higher where all these companies have gone up 600, 700, 800, even 1,000% on some of the Wealth Research Group companies that we suggested. What is next? And give me a roadmap here for investors.
Well, I think this next cycle, to for a second to talk about other commodities. I mean, gold always leads, so I think the other commodities, the non-gold and silver, non-precious metal commodities, we are going to have a great cycle, which I think will be driven by infrastructure spending. I mean, there's already a lot of that. You can see a lot of building going on in various parts of the U.S., but it's also going to be a global thing. There's going to be huge global infrastructure spending in the years ahead, and that will really drive commodities for a number of years. And
because people always focus on the $4 billion Trump infrastructure plan and kind of even forget that the China just announced a $26 trillion infrastructure plan, which is 6 times larger.
Yeah, that's an excellent point. It's happening globally. It's going to happen globally, and but getting back to gold, gold will lead. And excuse me. One, I wanted to mention, because we know that the Fed and monetary policy, there's too much debt in the world. Of course, they'll lower rates again, down to 0. that's one reason why they're hiking now, because they need room to cut rates for the next cycle. But we know that there's too much debt, and so that's not really going to work. And so given that interest rates are so low, they're even negative, if you mentioned, I mean, it makes sense for governments. I mean, they can't just let everything collapse. Governments are going to have to borrow money because they can print their own money. They can borrow it, for nothing now, and they can actually put that money into the economy through infrastructure spending, which, I mean, infrastructure spending is a good thing for the economy in the very long term. I mean, we desperately need that in the U.S. But, I mean, the they have no other option. I mean, that's the only thing left, and it needs to be done. And so we're going to see that in the U.S. We're going to see that globally, and that will drive the next cycle. And, some people have only said, oh, well, I only see, a 3 or 4 year cycle. I mean, I think we're going to have a really long next bull cycle with respect to mining and commodities. I mean, it looks like, maybe we had remember, if you go back to 1999, 2001, there was a double bottom in most commodities in 99 and 2001, and then the bull market really took off after 2001. So maybe we have the same scenario this time where it's a 2016, 2018 double bottom, and maybe the next cycle is not going to be 3 or 4 years, but maybe it's 5, 6, or 7 years. Maybe you have a recession somewhere in there, and then you have another good 4 years after that. So I'm just pointing out, but if you look at how cheap commodities are, you look at how cheap mining companies are, and you look at what could happen over the next 5 or 10 years. We're really in a excellent position to be investors. But like I said, right now you have to be really careful. You have to be patient, find out what the best companies are, and then just accumulate them on weakness. And also, take this opportunity now to learn as much as you can, so you'll be in a much more knowledgeable position, when the next bull market takes off.
Sure. It's a very interesting point you mentioned about the length of the cycle. And I tend to agree with you that the cycle will be longer than previous ones because it's global, because it's going to be relentless. When all of these younger demographics, China, India, and now the U.S. with the millennials, they're surpassing in numbers the boomers. They're going to start building homes. They're going to start wanting, everything that peak earners want, and it's very likely that this cycle will be longer than the normal 3 to 5 year cycle, and will include a wide range of commodities. I want to ask you, with regards to specific, what type of resource companies are better equipped and will do better in the next move up? Will it be the explorers? Will it be the developers? Maybe the producers, the prospect generators, maybe the royalty companies? What do you see? How are you creating this diversification within the sector? Do you like mostly the large producers or the small producers? Without, you don't have to get into specifics at all with regards to specific companies, but just as an overall overview of the sector.
Well, I think I'm really looking for exploration companies and looking for exploration companies that have deposits or projects that have multi-million ounce potential with good margins, and they have land packages that are really district scale. So in other words, they don't just own like one big project in one area. They own a project that really it spans a district, not just one little area, because those are the companies that will get acquired later on. And so that's what I'm looking for. With respect to other companies, I don't like prospect generators. I'm not a fan of those. What else? Optionality plays. I only own one right now. I think those are going to not do well this year. I think you could get, if gold goes down to 1050 or 1,000, I will be looking to buy some of those on the cheap. I only own one silver stock right now. I'm cautious on silver. I think we'll get a better buying opportunity later in the year. With respect to large producers, I just don't see I don't see enough upside in those stocks for me to, I mean, this is a risky sector, and you participate in this sector to make a lot of money, essentially. I mean, if you're low risk, I mean, if you're accumulating metals month to month, as I said, you know, that could be a low risk position. With respect to large producers, and royalty companies they're safer than large producers, but I don't see the upside potential there that I'm really looking for. I'm looking for things that can go up 3, 5, or 10 times. And if I have a basket of 10 or 15 of those, yeah, maybe 3 or 4 of those will really crap out and do nothing. But I mean, all you need is 3 or 4 of those to be, you know, 10 baggers or more, and you know, you can make a lot of money. So that's what I'm looking at right now. Basically, exploration companies with big land packages that have projects that have multi-million ounce potential with good grades, because I think that's what the larger companies are looking for, and that's what they'll eventually buy. I mean, once it looks like the sector has turned and we're really in a bull market for real, then I will go into riskier things like silver companies and optionality plays.
Excellent. I want to ask you about, to kind of wrap up the interview, June 16th, the GDXJ is going to rebalance its components. I've gone through many reports, including Mr. Neumeier yesterday, who discussed this subject at length with us. What is your take on this phenomenon, this forced selling that is going to happen with the GDXJ? Are you preparing for it in some sort of way? Wealth Research Group, we're looking into every company that is on that list that is going to be unloaded by the GDXJ, and we're looking at exactly what companies there are very potential for buying them at really historical lows. And on the flip side, are you looking at the companies that are going to get included in the GDXJ as a buying opportunity? So talk to us a little bit about this rebalancing.
Well, I'm looking at smaller companies. I mean, the problem with GDXJ is, as we know, they've taken in too much money. But even before this, GDXJ, I mean, they own companies with a market cap of $2 billion, $1 billion, $700 million. In my opinion, those really aren't junior companies anymore once you get to that size. GDXJ, so to begin with, it really wasn't that great of a junior ETF, even though it's really the only thing we had. Moving forward, because of all these changes, now it's going to be like a mid-cap ETF. It's not really a junior ETF anymore. So I'm not, with respect to companies that are added to the index, I mean, those are kind of big mid-tiers, and so I'm not really interested in those. Now, here's a point I can make. Now, I have my own proprietary junior indexes. Nothing special, but just 15 or 20 stocks, in an index. And to me, it looks like GDXJ is kind of artificially 7 or 8% lower than where it should be. So I think I've been thinking we're probably going to see a good summer rebound or a summer low, perhaps middle to the end of June or early July. And if we get that set up right around the time that this rebalancing will be finished, I think in GDXJ you could see a pretty strong rebound for a couple months, because it appears to me to be about 7 or 8% underpriced. But so there is going to be a trading opportunity in some names, but I will look at my list and see if there's any companies I really like that look like they're artificially cheap at that point in time. I mean, there might be 1 or 2. But I mean, that's my view on GDXJ. I mean, I think if it keeps trading this much lower than it should be trading at, then there will be kind of a boomerang effect if we do get a summer low and then a rebound into August. You get a boomerang effect where maybe the miners rally 20 or 30%, maybe GDXJ rallies so much more than that because it's so underpriced right now. So I definitely see an opportunity coming in the summer, but as far as is it in specific names, I'm not keen enough on that right now to say.
Jordan, where can people find more of your work? I mean, I'm a big fan. I love your work. I follow, one of the only people that I follow closely. Can you share with people more of what you're doing over there at the Daily Gold?
Oh, well, thank you, Lior. They can follow my work at thedailygold.com, and I post all my free work there. I have free articles that I publish, interviews like this I post there. I also do some podcast interviews myself, and you can get my sign up for my free list there, and you can check out the free list for a couple weeks, and then if my content is right for you, then you can consider subscribing to my premium newsletter. But just go to thedailygold.com and get on my email list, and that's how you can follow all my free work.
Jordan, thanks very much for taking the time today.
Hey, Lior, thanks so much for having me. It was a real pleasure.